Okay, Jeff Santoro, we're taking a look at Microsoft. We've seen some reacceleration in some metrics that might have slowed down a little bit over the past year or two, and things are looking fantastic. Are you ready to talk about what's going on with Microsoft, some things that are really doing well, and one thing that I'm really hung up with that I think maybe investors should be really cautious about?
Yes, I am. I found this most recent quarter to be very compelling, and I know you have a word of caution for our listeners, so I'm excited to talk about it.
Okay, Jeff, before we make this video, I just want to remind everybody this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, please go to our special link, fool.com/the smattering. Motley Fool is going to give you its 10 best stocks to buy right now. Might want to check out that after this video, or you can just stop right now and go check it out and then come back. Jeff and I, we don't have anything else to do. We'll just wait. Jeff, you want to wait?
Yeah, we'll be here. Take your time.
All right, welcome back, everybody. All right, so we're going to talk about Microsoft, Jeff, and I'm going to punt to you here. Talk about the quarter, the results, and some key things that really jumped off the page at you that you think are clear indication that Microsoft's heading in the right direction.
So for all that, I find myself every time they release earnings being like, I look at it quickly, everything's heading in the right direction, and I move on. I know what the company is. I know what it's trying to do. It's been around forever. This quarter really jumped out at me as being maybe even a little bit stronger than the last few. So just a couple quick numbers to frame it. Revenue grew 13% in this most recent quarter, which was just released a day or two ago. That's the fourth consecutive quarter that revenue growth has accelerated. So I think that's a positive trend. Pretty much everything else is following in suit. Gross margin went up about a percentage point over the past year. Operating margin is up. They grew their earnings per share 28% year over year. Free cash flow continues to accelerate. And when you look at the actual segment breakdowns of more personal computing, that actually has been the laggard segments for the last several quarters. That jumped up 23%. So that kind of reaccelerated, which is good to see. It's the smallest segment by percentage of revenue, but still good to see that heading in the right direction. It's just, to sum it up, everything's heading in the right direction. It's really hard to find something to complain about with this business. The only other thing I'll mention is the Azure cloud business. That was up 30%, 29%, I believe. And interestingly, it was partially due to artificial intelligence, AI, the big buzzword right now, but not entirely driven by that. It was actually driven also by more companies just migrating to the cloud, which is just the normal course of business for a cloud infrastructure company. So I think that's actually a good thing that this is not attributed to what could possibly be an AI hype bubble. So that's the top line numbers. I just think everything looks really strong. But I know you have a beef to, or you have a bone to pick with these results.
I do have a little bit of it's not even a bone to pick with the results, but I'm not going to talk about it yet, Jeff. I want to spend a few more minutes focusing on what's going on with Microsoft that's working so well, because I have immense admiration for Satya Nadella and the business that he's rebuilt at Microsoft. The change in the company's culture, refocusing it, breaking down silos that previously were real issues for the company and its ability to focus on things like the cloud. The reality is that we saw Microsoft fumble the mobile computing ball 15 years ago and continue to focus on desktop computing because that was the cash cow. And now Windows is, it's just a thing that it does. It's not the center of the business anymore like it used to be. And if it weren't for Satya Nadella's revisioning of the business and his clear vision about where cloud computing was going, where computing was going broadly, and the importance of cloud as computing becomes more and more distributed, all of those positive results we've seen, I don't know that Microsoft would be this dominant company. And I think that's a really important one is Azure. And I want to talk about that one for a second, because like you said, the growth that we've seen at Azure in its intelligent cloud business, it's been the normal course of business. It continues to take market share. It continues to leverage its relationships in the enterprise with all of its other products that it has that have become so deeply embedded, whether it's internal communications, productivity suites, email, all of those things that it does that have become so integrated. Azure is just becoming part of the way that companies integrate with Microsoft. And as a result of that, we're seeing margins improve too. And that's important. I think margins improved from below 70% to 71, 72% year over year. And that's important for a company like Microsoft because, again, that's gross margin. This is an incredibly operating efficient business. Their fixed costs are relatively low. So its ability to convert gross margin into free cash flow is incredible. It is absolutely incredible what it's able to do. And even though the dividend yield is low, it's less than 1%. It's steadily growing that payout because the company's profits have grown so quickly and the price of the stock has gone up so quickly that its dividend growth has not been able to keep up with that. And that's why the yield has gone down so much. But it's also been a pretty aggressive buyer of its own shares, too, right? So, another way to create per share value for investors, the company really nails all of those things really well. And I think that's important to mention.
Yeah. And I mentioned at the top, we're seeing a lot of these numbers reaccelerate, but it's also important to point out that the intelligent cloud segment, which is where Azure lives in terms of how it's reported, over the last several quarters, that was actually starting to decelerate, even as productivity and business processes revenue was starting to accelerate. And then all of a sudden in this quarter, it jumped back up. Same thing on the operating income side, right? So that was up 31% in the intelligent cloud segment this quarter, but it had been much lower than that in the last few quarters. So I think, I don't know, I don't if you agree with me, I feel like the intelligent cloud part of the business is really the future of Microsoft. I think that's what's going to be driving results for the next several years. So to see that particular segment jump back up and be more of the conversation, I think is a really good sign.
I'm going to share one slide from the presentation that really highlights that. This is the first quarter of the fiscal year for Microsoft that they just reported. Their fiscal year doesn't line up with the calendar year. And this is important. I would say, Jeff, it's not even just the future, it's the now, because it's the largest segment, $24 billion in revenue in the quarter. Productivity and business processes, more personal computing. This used to be the big one, right? This was
Yep.
Windows.
Right.
This used to be the big one. And again, this is basically, I think this is where it's going to grow going forward, 3 to 5%, somewhere around there. Basically, whatever global GDP growth is, that's probably about what it's going to grow because the addition of new computing devices in the enterprise, that's about where it's going to grow. But again, getting back to intelligent cloud where Azure lives, it's the largest, but it's still, we're seeing it's the fastest growing. So that's a real positive. And it will be interesting to see really across these, but particularly, Jeff, one thing that I'm going to be watching with Microsoft is in this productivity and business processes one. They said that artificial intelligence was partially responsible for some of the growth that they saw. I'm firmly of the belief that Microsoft is probably going to be one of the big winners from the AI revolution. And it's not going to be companies that just have AI in their name. It's going to be these big entrenched software companies that are able to leverage AI, not just with their product, but also things that improve productivity and improve their customers. And they're going to be able to sell that for really good margins.
Yeah, they're going to be able to benefit from AI in two ways. They have a cloud infrastructure business, which is theoretically going to see more business as more companies that use their services want to incorporate AI into their businesses. If I'm understanding how cloud infrastructure works, that's one way they can benefit. But remember, they're also a big investor in OpenAI. So you can imagine they're looking at ways to pull a
OpenAI, the company that owns
does
ChatGPT.
ChatGPT, right?
Right,
So you can
right.
imagine that they're already thinking of ways to pull AI into their products. They can, I think, benefit from the AI revolution or whatever you want to call it in those two distinct ways.
Yeah, and we've already seen the beginning of that, and I think that's only gonna continue to increase. Jeff, are you ready for me to finally share my one concern and the one thing that I think should give investors pause before they buy Microsoft shares, before they load up, before they make it a foundational stock in their portfolio?
Yes, we've already teased it several times, so go ahead.
And it's simple too, and I'm guessing some savvy investors probably already guessed it, but it's valuation. The stock trades for 35 times earnings. And sure, I'm going to give you a little bit of the behind the scenes here. Jeff and I almost shouted at one another. We argued about this for a while about valuation with Microsoft, looking at it historically and thinking about the valuation. And admittedly, one of my mistakes over the past decade or so as an investor is with some of these larger, highly profitable companies being too valuation averse. But I do think that in this capital environment, or in this cost capital environment where interest rates are so much higher, I think some of these big, steady companies like Microsoft, that a lot of their investors are not necessarily chasing growth. They invested in companies like Microsoft because they were stable and very profitable and very important, may start looking to shift some of that away into fixed income, bonds, things like that, that are going to be stable value. My biggest concern is that we're going to see the average multiple that investors are willing to pay for companies like Microsoft start to come down. Pair that with my concern about Microsoft's ability. Again, earnings per share were up 24, 25% this quarter. If the company can grow the earnings per share in perpetuity at that rate, the next 5+ years, yeah, 35 times earnings doesn't sound too bad. I'm just not convinced that's going to be the case. As much as AI is going to be the next catalyst for the business, as much as Azure and the cloud continues to be a growth engine, that's the one thing I think investors need to be really mindful about, and maybe thinking about building out your position in Microsoft over multiple years, looking for better valuations instead of buying it at a premium valuation when there's no promise that it's always going to be that premium business. And the market's probably going to give you better opportunities to buy it at a better price point down the road.